Hi everyone, and welcome back to today's morning report on Friday the 8th of April with me, Richard Perry, market analyst at Handset Markets. I'm going to look at Eurodollar now, and we're still stuck in this range, aren't we? We had a slight poke to the upside yesterday, 14.53, which was above those sort of 14.30 area highs, but it failed up at that level, and that is arguably where all that overhead resistance starts to come in from these big long-term range highs. And it's interesting that the market failed at that point and fell over. RSI up around sort of 70 area again, and the MACD lines and stochastics beginning to turn lower again. You'd argue these are all sort of signals that suggest that. I mean, that's what should be happening if you're trading in a long-term trading range, and you're sort of bumping up against the resistance, and you think that the range is going to continue. The momentum indicators at these sort of extreme range levels, at 70 on the RSI, for example, is where sort of the rally is going to roll over, and that certainly seems to be the test at the moment. We've got this range of about 100 ticks. It's sort of 120 ticks if you take it as the exact, really. Between sort of 13.25 at the extreme low from Wednesday up towards sort of 14.50 at the extreme high of that range, but certainly seems to be sort of consolidating with this old breakout high. And interestingly enough, that the candles are very neutral, aren't they? Very small bodies, very long tails, which suggests the range is ongoing and has an uncertain outlook to it. So you would question whether what the market is doing, and clearly it's sort of every time it gets above sort of 114, it doesn't like it. But then it doesn't really want to break back to the downside, so it is in a sort of state of flux at the moment. It's not really sure either way. Here we see that range over the past week or so. The momentum indicator on the hourly chart very neutral. RSI buzzing above 30, below 70. MACD lines increasingly sort of gravitating around sort of the neutral point, and no real sign of a breakout really. That 1230 level again sort of supportive. Sorry, a 1330 level is supportive. So you'd argue if you broke below 1330 on a decisive basis, that would target sort of at least 100 ticks of downside. So you're looking at sort of between 1210 and 1230 as your downside target. Look at the moving averages on the hourly chart, increasingly neutral, coming all together. That is certainly a neutral outlook. So we're waiting for this breakout really on the euro. The euro apparently there this morning has had a slight pop to the upside on comments by ECB member Mersch, who basically said that the governing council wasn't targeting a weaker euro. So subsequently the euro strengthened a touch on the back of that, but again nothing really, and we're still waiting for this breakout. No economic data today from the US or the Eurozone to really sort of affect this chart. So for now, we are still in this state of limbo, really. But as I said, on the longer term basis, you'd argue that the big overhead resistance is still coming in around that 1450, 1460 area. And that could provide a cap to the gains, and you could see some profit taking possibly coming in. So I wish you good luck in your trading today, and I'll speak to you later.